Well, the stock market begins trading this morning for the first time this year. It is on the heels of an impressive run in 2014, with the Dow up more than 7%. Also, the dollar shot up in value last year, and oil prices fell dramatically. Yahoo Finance senior columnist Michael Santoli is here. Michael, Happy New Year's and good morning.
Happy New Year, thanks.
We always hear what goes up must eventually come down. We've had 6 years in a row of up, up, up.
Yep. It's hard to say exactly when or how much it might come down. We're kind of overdue for some kind of a setback here. But again, in October, we had a very, very brief but a little bit scary pullback, almost 10%, and we rebounded right from there. I think most of the fundamentals, which is kind of slow and steady U.S. growth anyway, very, very profitable companies, which has encouraged investors to throw money at stocks, and also very low interest rates, plentiful money among investors. Those things remain in place. But of course, it is good to keep in mind the market's been going up for 5.5 years.
But that said, we still haven't technically hit a correction, as you mentioned, and there's some real trouble out there. Russia, Japan, Italy, China slowing down.
Yeah.
Does that eventually catch up? I mean, the U.S. just keeps chugging along.
It's hard to know if the U.S. growth, which really does seem as if it's set to accelerate, jobs, almost 3 million new jobs in the past year. Obviously, it seems as if the U.S. is a little bit of a haven here from a lot of that global turmoil, but for big companies, they can't avoid it. So I think it could be a bigger issue for financial markets than for the U.S. economy. The U.S. economy is not particularly dependent on exports and on what goes on in the rest of the world, but the markets are a little bit more. So maybe we're in for a phase when the economy here seems to do a bit better than is reflected in the stock market. We've had years when that was the reverse.
Oil prices have been great for the consumer. Everybody who's driving home from visiting their family is going to see it at the pump. What does it mean for the economy at large?
It's generally a good thing. I definitely think the benefit of lower energy prices is far more of a good thing for consumers and even for businesses than it is a bad thing.
It's like a tax cut.
It largely is. It's not the most dramatic one. I mean, it's not like 30 years ago when we were much more dependent on energy. But I do think for businesses, there's been a lot of investment in the middle of this country in oil and gas exploration, and a lot of that capital is not going to get a good return if oil prices stay where they are. That's not really a concern for most people. But again, for segments of the stock market, it could be somewhat of an issue.
You mentioned staying where they are. Let's talk about wages. Will wages stay where they are? Do you think that there could be some good news there also?
Most of the indicators are we should get some decent wage growth here. The labor market's tightening, lower than 6% unemployment. It seems as if we're finally in for that phase when the median wage should at least have a little bit of upside relative to what it's been for a while.
Michael Santoli, thank you very much.